Peter's Box. Life is for the living.
Hello and welcome to Peter's Box. Today I'm with a very fine gentleman who works in the fintech space, and I'm here to find out what fintech is all about, and maybe if I can make some money from fintech, I go into that field. So welcome, Jeremy, to Peter's Box, and we want to know what fintech is all about. So what does fintech really mean? Is it an abbreviation for something?
Yes, so fintech is a combination of two words, finance and technology. And it's two of the industries that are doing the best globally. The technology companies are skyrocketing, the finance companies, the banks, traditional financial institutions are doing well. And so the combination of trying to deliver financial services by leveraging technology rails is what brought about the word fintech. It's not just limited to the finance and technology industry. You hear other industries doing the same thing. So trying to deliver healthcare with technology is now called health tech. Trying to deliver education via technology is called edutech. So fintech just becomes that variation of finance and technology, and that's how come it's become an industry on its own, fintech.
Okay, so if you take banks for example, they already have their digitized platforms and all that. Isn't that already fintech, or fintech has a specific dimension to it?
That's a really great question. So each institution to some extent is now predicted to become a fintech in the next 10 to 15 years, because the way you make payments to certain companies, or a lot of companies now, is going to be via digital channels. You can either make a payment via your card, to your account, via MoMo, and in certain other areas, as Apple Pay, Amazon has their own payments. So you can consider that every institution has a fintech element to it. But typically, when somebody talks about a fintech, it's a company or institution dedicated to providing a financial services, leveraging only technology. The difference between what the banks do is that the bank's primary channels are still their branches, at least for now. In the developed world, now they are evolving where they are beginning to reduce the number of branches, and they are beginning to take their digitized platforms as the branches. So they replicate everything that you could have done in the branch on their digital platform. The traditional bank still maintains the brick and mortar structures, and a traditional fintech would not go the route of any brick and mortar. They would be entirely digital. They probably would have one physical location for regulatory purposes, but they would maintain a lot of their services via digital channels exclusively. So the best example you can give in Ghana is that MTN Mobile Money has now separated the mobile money arm to be a standalone institution. So mobile money is a typical example of a fintech service where you now have the ease of use, the convenience. You can do mobile money without ever having to go to an MTN branch. You can pay at the point of sale, and you can receive money into your wallet. You can save, you can lend, you can buy insurance, you can do so many things with that, and that becomes the revolutionary technology-driven financial service.
Do you need some specific courses to enter into fintech? Because if it's a combination of technology and finance, does it mean that you have to have knowledge in both areas to operate, or you can outsource your technology aspect and outsource your financial aspect as well?
Sure, so it depends. Obviously, it's finance and technology. So if you have a background in finance, you could work in fintech. If you have a background in technology, you could work in fintech. But fintech is an umbrella term. So fintech can be considered in the same way you would consider finance. You can find somebody with a law background working in a financial institution because they have a legal department. You could find somebody with a procurement background because they're working in a procurement division of the financial institution. It's the same with fintech. Someone who has done economics could work in a fintech because there will be a department that is specializing in the macroeconomics. You could also have people who are communication specialists who handle the company's PR or working in fintech. But if you want to go into the core aspects of fintech, then it's that finance and technology. Now, because technology has evolved and so much over the last couple of years, there's specific in-demand skills. Now, AI is a buzzword, so people who are AI specialists have a role to play in specific fintech institutions. Machine learning engineers, data specialists, data scientists. When it comes to the finance aspects, accountants, relationship managers, partnership leads. So those are the aspects. So if you were looking for courses, you would first have to determine what exactly would you want to do in fintech. Once you identify that maybe this aligns more with my career path anyway, then you can think of, okay, first let me educate myself on the fintech foundations and fundamentals, understanding how fintech even came to be. And just a short story on that is in 2008, when there was a global financial crisis, when a lot of people lost money because they had put so much confidence in the banks and they realized that the banks were doing illegal trades and everybody lost their money. Ghana, the similar situation would be the 2019 banking sector cleanup. Now people were confused. Where do I actually keep the money? Because the institution that we're taught to trust is the one losing our money. If I keep it under my bed, I'm worried about robbery and all of that. And so that's how come Bitcoin emerged as the alternative that was not owned by the government, owned by any individual. It was basically you putting your trust in technology and the network of people who are makers and sharers. And from that, others also started evolving that. And I look at the bank, the way you make payments is so inefficient. If I don't have a bank account, I can't send money. So somebody builds a business around just the payments aspect. That's similar to what ZPay would be doing. Their business is built around payments, how to receive money, how to transfer money, either locally or internationally. And within ZPay now, there's different departments, but the core function is one aspect of the banking system that they have mastered and improved, and they're making money from it. So it's looking at what exists, finding the weak points, and building your business or startup around those weak points. Somebody says, well, these people are only lending to the affluent people. If you don't have a job, you are a farmer, you don't have regular income, you can't get a loan. Now, my company, JUMO, is looking at it and saying, but just because Peter doesn't have financial history doesn't mean that Peter is not a good person. So I can look at Peter's mobile money transaction history and determine that if you look at Peter's mobile money wallet, he gets money at least to this amount. So you can give him an average amount of this. Then we send you a message, oh Peter, you qualify for 50 Ghana, for 200 Ghana. We didn't ask you to provide any information. We've already gone through the data and we know that you qualify. That can only be done by technology. Whereas if you went to the bank, you have to sit in front of a person. The person will now question you, assess your life, and determine based on what they feel whether you're a good person or not. And then they grant you a loan. And that can take weeks. This is now being accelerated and happens in seconds. And this is all facilitated by technology.
Okay, you mentioned MTN, Momo, ZPay, and JUMO. What other fintech companies are out there?
There's lots. In Ghana, so there's different domains of fintech. There's a payment rail, there's we call it RegTech for regulatory technology. There is LendTech, which is lending technology. In Ghana, JUMO would be the go-to for lending technology. All the mobile money loans that you see on MTN's menu is provided by JUMO.
Oh.
If you wanted to go to remittances and payments, there's ZPay, there's ExpressPay, there is Hubtel, there's also there's IT Consortium. There's so many of them now. If you went globally, there's Apple Pay, there's Ant Financial Group, Alibaba, Alipay. Even the Amazons are now beginning to become fintechs with their own rights, but they are more considered e-commerce platforms, not fintechs. But there's globally acclaimed fintechs like Stripe, PayPal, and Co. And in Africa as a whole, there's lots of fintechs. So there's a lot of innovation in this space.
When it comes to money, you will not be forgiven if you mess up with someone's money. People would come at you. And looking at the history of certain financial seasons, we've noticed a little bit of ups and downs in that area. How secure is fintech? Because in your submission, you mentioned being able to study the financial history of Momo Wallet and determine how much money goes in and all that. How are you able to get access if that information is supposed to be something private? How does the security play in fintech?
Yeah, so security is one of the biggest priorities in fintech because You are trying to convince a customer to depart from the traditional safe and secure institutions that they know, the banks, and now move over to your new, unique, innovative platform. One of the biggest things you need to solve for a person to gain confidence in your system is that element of trust. So, for example, with JUMO, before we grant you credit, you have to consent. So, we are able to score you without knowing that it's you. So, if we reach out to MTN would give us anonymized data, not giving us any data that allows us to know who the individual is or any personalized data. You only get transactional data. Now, without knowing who the person is, it takes out the bias from it. And so you can sort of independently gauge this person's transacting history and data suggests that they're a good customer and they're eligible for 50 to 100 Ghana. So we send you a message to say, MTN will facilitate that and sends it to the person to say, you qualify for this amount. It is only when the person consents and says, I want the loan and I want MTN to share my data, that we can now know who it is and get your KYC data. So without consent, we can't do anything with your data. We don't even have the actual data itself. And you must only provide consent to the technology company to do that. It's the same way with remittances. You have to be very cautious because people are going to perpetrate fraud.
Mm-hmm.
So you have to innovate as the nefarious guys are also innovating to make sure that you are combating their fraudulent acts with more secure cybersecurity aspects. So one, you prioritize data privacy, beef up your cybersecurity to make sure that you can use let's call it the predictive abilities that technology offers to be able to anticipate fraudulent activities that might happen, and then also plan for what happens after the fact. As soon as Peter says, I feel like this is going wrong, what do you do to quickly fix the situation and make sure that Peter doesn't lose confidence in the platform? Those are all activities that the fintechs really prioritize, and a lot of funding goes into those aspects.
So I assume that it is the RegTech aspect of fintech that does the regulation, or who is the regulatory body responsible for implementing these regulations?
So yes and no, in the sense that, so regulatory technology is technology that is used to make sure that you comply with regulation. The regulatory body is different. For the fintechs now in a country like Ghana, the regulatory body would be the central bank as well.
Okay.
The central bank has opened a unique fintech and innovation office that oversees the fintech industry. The regulatory office is going to tell you that you must conform to these regulatory standards. Otherwise, you can't operate. You have to make sure that consumer protection is constantly reviewed and renewed. You have to do all of these things. The way that you do it is by going to the RegTech company to say, listen, I've been given these regulatory criteria that I must meet. I must make sure that Peter's data is safe. I must make sure that nobody is able to take his Ghana card and remit with it. I must do all of these things. I'm a fintech. Mine is to make sure that he can pay, he can receive, he can borrow. But I can't do all of these things without your help. So they come in and say, we have this technology that monitors his activity, that monitors all the red flag areas or actions, and we're able to mitigate those things so you can focus on doing what you really want. What has happened is that now the regulatory bodies themselves have started patronizing the RegTech product because it helps them now understand their industry, put together the things that they require, the structures and the facilities, the infrastructure that they need to be able to regulate better, because now they are also supported by technology and it's not going to be individuals going through sheets and sheets of paper.
On the issue of someone wanting to enter the fintech industry, so let's say a person is interested in the technology bit of it, how to use technology to facilitate, whether it is the finance or is the legal aspect. What are some basic courses that that person can take in terms of the technology? Is it going to be purely based on coding, or is it going to be based on some machine learning aspect? What are the basic components of tech when it comes to fintech?
So it depends on the fintech, but there's some general sort of fundamental courses or skills that you must have. Being able to code definitely comes in handy, but not just being able to code in the programming languages that are most in demand. So Python and the more emergent ones, or the ones that relate to or are more used by the fintech industry. Also, being able to understand sort of the emerging trends that are happening within the technology space in fintech. So if you hear a lot more about AI and its applications in finance, then it would be good for you to at least understand the fundamentals of AI, which aspects of artificial intelligence apply to finance and how does it apply. Some people think that artificial intelligence in finance only helps with the customer experience, so chatbots, being able to receive voice prompts and call large language models, or mitigating risk, fraud detection. But now AI is being used for its predictive capabilities, being able to predict a customer's propensity to take or repay a loan. That if you give this loan to Peter, Peter's behavior matches all the data that we've gathered on other people who are similar to him, and so we can predict his behavior pattern this way. That comes about by studying the predictive analytics aspect of AI. So it would be good for you to involve yourself and immerse yourself in that and get the understanding. If you also want to be a data engineer, then you basically have to go along that track. You could be a data engineer, data scientist, data analyst. It's in levels, and you have to start from level 1 before you get to the next steps. There's so many aspects of the technology aspect, but it depends on what exactly catches your interest or you see your career path going. Because it helps if you are interested in what you're doing and not being forced into it. So there's lots of technology paths that you can take, but you first have to identify which catches your interest and what you can see as being a career path that would be at least in line with what your fundamentals are.
Okay, so let's assume for a moment that I have the skills, I have the knowledge, I have the logistics to start a fintech company. What would you advise as a startup person in the fintech industry? Would you say that I need to understudy a particular fintech company before I start, or I can just work with my team and start the fintech company?
Well, if you've gotten to the point where you already have a team, then I'm assuming that you've answered a lot of questions. But one of the first questions I think you should ask yourself as an entrepreneur or anybody starting a startup, not even for fintech, is be able to answer the question, what problem are you solving? Because fintech is ultimately there to solve the problem of unequal access to finance. So within that umbrella problem, what is your specific issue of resolution? What is the gap that you are bridging? It's always advisable, and I find it's that most times people who have actually worked in companies that were solving these larger problems tend to have a more likelihood of success in their own. But people who are starting from scratch and don't have any prior experience now have to go and make all the mistakes before they get to the resolution. The statistic is 7 out of 10 startups fail within the first year. Of those that don't fail within the first 5 years, of those that don't fail within the first 5 years, 7 out of 10 will fail within the next 5 years. So you give yourself runway when you've been able to practice on someone else's ground. If you have worked in a company that is in a fintech and been able to understudy, you have learned the lessons, you understand what the finished product looks like, and so when you start yours, you have something to target. But regardless of if you are trying to go a different direction with it, you kind of have a blueprint that you can build upon. But if you try to go it from scratch yourself, then you have to make sure that you are going the extra mile to acquire as much knowledge and experience as you can. It would be great to have mentors who are already doing it, coaches, and a team that is coming from places that they have done this before. Otherwise, then you're just flying blind.
And the picture I'm getting is that the fintechs have their clients through technology, because I've not heard anything about advertising to the public about what you do as a lending fintech, for example. I don't think I've really seen fintechs come out to publicize their works. Is there a particular reason for that?
So one of the reasons why you don't see a lot of publicity from fintechs is because the problem that they're trying to solve is quite huge. And there's already a lot of demand for their products. One thing you don't want to do is to go advertise and have an avalanche of people trying to come for your service, and your service can only handle 100,000. But now you have 1 million people trying to download your app, and the app crashes. So what they try to do is they try to grow incrementally. So if they recognize that we already have a high demand or more demand than we anticipated, they tone down on marketing, and they probably limit it to, we call it BTL, below the line marketing, where they are going via the digital channels, social media, and trying to target specific individuals. Because if you go ATL, radio broadcast, billboards, and co, you have the whole mass market coming at you. Sometimes it's also a factor of who exactly you're targeting. Somebody who is building a fintech app that is supposed to be for lifestyle or wealth tech, so it's for affluent individuals to manage their finances and their budgets, it's probably targeting people who have an affluent lifestyle, who have money to manage. You're not targeting the mass market who has a specific need. So that is going to inform your marketing strategy. For JUMO, for example, we are partnered with MTN. So our customers are not exclusively obtained from technology. We are riding on MTN's customer base. Any fintech that partners with a bank tends to ride on the bank's customer base and provide the bank's customer base a service that it didn't have. So essentially the bank or MTN's advertising or marketing serves as yours. In our case, we have more demand than we can supply. Because if you have 10 million people trying to take loans, but you only have enough loans for 5 million, then if you advertise more, you're putting yourself in a worse condition. So you tend to make sure that the two are going in tandem and you do the marketing incrementally with your ability to provide the service to the customers. When you get to a certain level where you can accommodate, let's call it an unlimited amount of demand, and you have an unlimited amount of capital, then you can go all out.
Since you're an industry person, can you shed some light on the fear people have surrounding Bitcoin and not being able to access regulators? Because a lot of people make that comment that, well, it looks like a good thing, but how secure is it? That security, where should I go to if something goes wrong, if I'm patronizing Bitcoin or any other cryptocurrency?
So yes, I think that the risk aversion is there because there are some people who inherently would prefer to have a go-to person in the event that something happens. But then the reason why this whole cryptocurrency community or innovation came up was because people began to recognize that that go-to person was not as trustworthy as possible. The reason why people have a fear about using Bitcoin possibly has to do with the fact that, one, it was new and it was a payment rail that people didn't really understand. And there was a lot of things that were misconstrued in the sense that if you save your money in a bank, which is how you save your money in a Bitcoin wallet, and the bank gets robbed, and you go to the bank the day that it gets robbed to say, I want my money back, and they tell you, well, we've been robbed, so we don't have your money now. You won't lose confidence in the money that you had in the bank. You will lose confidence in the bank. What people were doing was they were confusing Bitcoin and the Bitcoin wallets or the Bitcoin processors with Bitcoin. So if a Bitcoin processor or a large wallet like, what's the biggest one now? I forget that. But assuming they got hacked, people would lose confidence in Bitcoin, not the fact that the institution got hacked. It's almost saying that Bank of Ghana is misusing our money, so I've lost confidence in Ghana cedis. It doesn't really make sense, right? You can lose confidence in Bank of Ghana because of their actions, but the underlying currency still works. So I think people misconstrued a lot of that. And granted, there were a lot of people who were using it for shady things. There were black market deals. If you wanted to buy something and you didn't want to leave a paper trail, it was the way to go. Now all of those things have evolved, and now you can actually pseudonymously trace somebody. So not anonymously. Everybody has a sort of unique key that can be traced back to them. And because it's a public ledger, everybody can see that Peter made this transaction on this date, or Peter's Bitcoin address made this wallet transaction on this date. And more regulation is getting into this space, which is why we're beginning to hear regulators trying to come up with central bank digital currencies, where they're trying to solve for the problem of people who want to have a centralized authority that they can go to if they use cryptocurrencies or blockchain or any centralized digital currencies, so that if anything happens, they have a point of call to go say, help me solve this problem. But there's a group of people, or the initial group of people, did not want that at all. So the central bank digital currencies and the typical cryptocurrencies tend to have contradictory aspects of them. But each of them exists to solve for a problem that someone has. So regardless of the problem, you have a function.
Do you think the cryptocurrency industry would become a prominent industry and an essential service sometime in the future?
100%. The reason why I think this is the case is because I don't think any innovation has come under as much scrutiny as Bitcoin has. And I don't think that any innovation has had so many regulatory bodies or authoritative bodies try to cancel it or diminish it. And through all of this, it has still remained. people still find utility for it. I saw statistics that showed how much in Africa cryptocurrency is used, despite the fact that certain territories have banned it outright and certain territories are not taking an actual stand on it. And you begin to realize that in the period of inflation, people didn't recognize that that was the way that others were avoiding inflation. They were going by the cryptocurrency rails. So if you're not somebody who's paying attention to that space, you will think that a bubble has burst. But the reality is that it's still being used, you're just not paying attention. The value of cryptocurrency, one Bitcoin, when I checked last weekend, was about 500,000 Ghana cedi. This is when it is not even in a bull market. This is when people are thinking. If you look at the statistic, it's trending upwards over the last 10 to 15 years. And so it's undeniable that it's not going away. If it would have gone away, it would have, if it was going away, it would have gone away already. So it's really, people are not paying attention and it's creeping up. But people are enriching their lives, despite all the issues that it has, people still find utility in it. And all the issues with technology tend to be solved eventually. With each iteration, an improvement comes and it's eventually going to become something that people will use. Similar to how mobile money came and nobody was using it, and eventually now you can go a week without actually having cash.
That's very interesting. What days that Bitcoin, you mentioned, one Bitcoin was now about 500,000 Ghana cedis. Well, maybe that's a discussion for another day for me to understand that concept. But to end on probably a lighter note, we've talked about fintech, the finance and the technology aspect. Now, can you give us some practical advice on how to manage finances? Because this is something I'm not taught in school. You come out of school before you realize that, okay, I need to probably have multiple streams of income. Maybe I need to save here, or I need to do this kind of business to do this. You being in an industry that is looking at both technology and fintech, how do you view finances now, and what are some of the best routes to invest in finance?
So I don't think of myself as an expert when it comes to personal finance. But I think that there's two ways that people typically approach managing their finances. It's either you're very conservative and you save as much as possible and you reduce your costs as much as possible to make sure that your savings exceed your expenses, or you continuously increase your income. There's a limit to how much you can save and how much you can reduce costs, but there's no limit to how much you can increase your income. And that is where multiple streams of income come from. The problem with multiple streams of income is that now your time and attention is also being spent in multiple areas, which is why passive income has become such a big term now, because you people strive to find ways to earn income without exchanging it for their time. So that's one thing that technology affords you. So for example, you open a YouTube channel, you make videos on the YouTube channel. The videos that you make are going to continue to earn income even after you've created a video. So you only make the video once, but it's continuously earning you recurring income. So it's not all the way passive because you did put in some effort. It's just that it's not a recurring effort that you have to make, even though you do have to continue uploading videos for the algorithm to pick up your videos and get you to view. So you think about different ways to increase your income. If it's your job, then you have to think of other ways to climb up the ladder. Sometimes you can leverage your job to also get different opportunities to earn money. That's usually an ideal way to go about it because now you're still within the same domain and you're not doing something completely opposite of what you did. So if you work in a technology area, your side gig is not completely opposite like farming, even though you can do that. It's just that most of the time when you're within the same space, it's easier for you to make the most out of it than when you're going through totally different industries. Now technology helps you facilitate these things. And being in the fintech space, I've seen how many people have been innovative enough to be able to leverage these things. Before there was YouTube, you couldn't make videos and earn money unless you were a TV presenter or radio show host or somebody in the media. But now technology allows you the luxury of sitting in the comfort of your home, making videos and earning from that. And there's lots of other industries that allow you to do these things. So I think that it's two ways to think about it. Either you are squeezing yourself and reducing your expenses, or you are trying to find ways to increase your income. One is a defensive strategy, one is an offensive strategy, but the best way to go about it is to try and blend both. So whilst you're reducing your costs, you're increasing your income. That's the only way to have a surplus so that you can achieve the wealth that we are all pursuing.
Okay, so if someone wants to listen to more of what you talk about, do you have a show? Do you have a channel?
I have a YouTube channel that is called Jeremy Quainoo. I mostly post about the fintech industry, things that people want to know, from beginners to people who are intermediate to advanced. I talk about personal development, I talk about career growth, and if you want to hear more, I go into more detail there and I make it engaging, so that you stay interested for the 10 minutes that you.
What was the last video you posted?
The last video I posted was an interview with Michael Adote from the Toastmasters community about building resilience during tough times. And it's from part of the Toastmasters community sort of engagement and narrative, but I think it was a very wholesome conversation.
Thank you so much, Jeremy, for shedding some light. Maybe I'll start investing in the fintech side since I love money, and we'll see how it goes. Thank you so much for your time. It's been a pleasure.
Definitely.
Peter's Box. Life is for the living.